Welcome to our 8th episode of STOKR Insights. Today, Arnab and myself, we are actually in Berlin. Behind us, it looks like a kitchen, but it's like more like a hipster conference room, what you have in Berlin. And they have also a special guest. It's Jesse Knutson from Bitfinex Securities, Head of Operations. Hi, Jesse. How are you doing? Really nice that you joined us.
Very good, guys. Thank you for having me on the show.
So Jesse, I think we worked in the past also, like before you are now currently with the Bitfinex Securities, when you were in the Blockstream, right? So we know you for, I would say, well over 2 years now.
It feels like 100. Yeah.
Yeah, and I think maybe more years to come, right? So, but for the audience, why not you give a quick introduction about your background and your role at Bitfinex and just a quick intro.
Yeah, sure. My name is Jesse Knutson. I'm head of operations at Bitfinex Securities. My background is kind of a mix now at this point of traditional finance and new finance. So, I worked for a number of years in investment banks in Macquarie, Barclays. At Macquarie, I was head of ECM for Macquarie in Taiwan. 2018, I started to, maybe I can back it up a little bit. So I guess I got interested in Bitcoin kind of around 2014. 2016, 2017, I started to push things internally with the bank, different opportunities with Bitcoin. One of the things we got through was, I think, one of the first equity investments into a Bitcoin miner by a Western bank. It was actually pretty early. That was in 2018. And then 2018, it kind of became clear it was going to be difficult to do much more Bitcoin stuff within the bank. So I decided to jump right into the digital asset industry. And before working at Bitfinex Securities, as you mentioned, I was VP of Financial Products at Blockstream, where I worked on helping to design and distribute financial products built on Bitcoin and backed by Bitcoin and Bitcoin mining.
And right now you're with Bitfinex Securities, right? So
yep, and now I'm head of operations at Bitfinex Securities.
And your role, like if you can give a little bit more color on that, that would be great. Yeah.
Yeah, so Bitfinex Securities, it's one of only a handful of platforms globally that's licensed and regulated to facilitate security token issuances and then also to support secondary market trading. We're part of an even smaller group that's licensed to do that in more than one jurisdiction. So we were the first global digital asset company to be licensed and registered in Kazakhstan's AIFC, which is a financial center like the DIFC in Dubai. And then more recently, we were the first global digital asset platform to be licensed under El Salvador's new digital asset regime.
So I think that when me and Tobias, we are discussing on this point before preparing these things for this episode. So I think one question which we also faced when we are talking to people about the securities token market, about Bitfinex and others, people often confuse about what is Bitfinex and what is Bitfinex Securities. And because when you see to the Bitfinex your UI, you can access Bitfinex Securities from the Bitfinex page itself, right? So how it differentiates, if you can share some color on that.
Yeah, I think in terms of how we differ from the Bitfinex main platform, I think the question there is probably what's the difference between security tokens and other coins and tokens? And I think security tokens are, I see them as assets that have clearly defined rights for investors and obligations for issuers and a regulator to set the rules and to management enforcement. And I think typically security tokens probably fall into one of three buckets, into equity, debt, or funds.
And primarily that means the Bitfinex Securities is focused only on the securities which carry Gensler's.
Yeah, Bitfinex security token. Yeah, we're focused exclusively on security tokens.
Perfect. And right now, as you mentioned, I think your conversation that you are with the AIFC in Kazakhstan, right?
Yeah.
So how is that over there? How's the regulatory environment over there at the moment? So how what categories you're operating there?
Because
I think
just to give a little bit of context, because we are operating out of Europe. We have, as you know, we have also issued BMN, which is listed on your exchange as well.
Yeah.
And in the secondary markets, we have also a kind of old kind of regime where you need a central securities depository, right? This is one of the main challenges now we try to do with a pilot regime to give a little bit leeway also to companies to list security tokens. But I understand from your regulator, the Astana Financial Center, actually said you can already operate without a central securities depository. Maybe you can give a little bit of light how it's actually really working there.
Yeah, so I was just in the AIFC recently. I was there 2 weeks ago for the regulator's flagship financial conference, Astana Finance Days. It's actually my second time participating in that conference and my third time going to Kazakhstan in the last 12 months, which is, quite a feat traveling out of Asia. I'm based in Taiwan, so that's quite a commitment in terms of travel. I think it's a great regime. I think the AIFC and Kazakhstan is probably fairly unique in that they're very front foot on this technology and they've already got a solid understanding of it. I think that's probably partly because the miners have been there for a number of years already. So they've already got a solid understanding of Bitcoin. They've seen that, they've seen big companies grow up at around the mining industry, and they've seen how that industry can be accretive to the domestic economy, how it can contribute to taxes and employment and things like that. So you don't really get a lot of those questions and pushback that you might get in other jurisdictions about what happens if Bitcoin goes to zero. Like that kind of question doesn't come up. I think also because they're kind of a mid-size economy that really doesn't have much in the way of financial services. I think financial services are less than 4% of GDP. So they're very keen to leverage technology to try and move the needle a little bit in terms of economic growth. And I think also there's a lot of really interesting companies over there that kind of struggle to get access to global capital markets. So for a number of reasons, I think it's a really good regime. And maybe outside of just the regulatory aspect, I've just been shocked about how open-minded people are over there, and from financial services providers to traditional securities exchanges to brick and mortar companies. There's just a lot of interest in the idea of security tokens in the AIFC. To your question specifically about the central depository, our licensing in the AIFC is the same as the conventional securities exchange in the AIFC. We're licensed as an exchange and as a clearinghouse. We're also operating within the regulator's fintech lab, which allows us, an increased degree of flexibility in terms of how we operate and the type of issuers we can interact with as well. When you take a step back and think about our basic objective on the STO side, it really isn't that complex. We're simply looking at taking the technological advantages of the digital asset industry that have, I think been battle tested over the last 10 years and applying that to traditional capital markets. So we're looking to bring the advantages that you guys are super familiar with, right? Instant settlement, global liquidity, 24/7, 365 trading, and even self-custody, peer-to-peer trading, and all of that can happen between whitelisted investors. So I think, that doesn't necessarily require a dedicated regime, but it does require an acknowledgement that our technological advantages, especially when it applies to things like a CSD, we operate differently in terms of how securities are cleared, settled, and how things like registries are maintained and who our members are. So my understanding is that there will be more of those kind of modifications made in Kazakhstan in the coming months.
So Jesse, very, very, very interesting. My understanding is like you built really like you're using like liquids as sidechain of Bitcoin. So you really built like the market infrastructure actually on Bitcoin, if you like. And do you also consider like different blockchains, or you see like really like in the moment like the future of security tokens on Bitcoin itself, right? Because you highlighted also like the AIFC as like very familiar with Bitcoin already. Yeah. They're very comfortable with the blockchain, and it's very robust itself. And I think like Liquid is a great solution to that, as you also know, because you worked for Blockstream before. So yeah. How do you see that?
Yeah, I mean, we're agnostic in terms of technology, but I think certainly Liquid has a massive lead. I think, the Blockstream Mining Note, I think in my opinion, is one of the only real tokenized securities in the market. And I think it's the only one to do it at, fairly significant scale, right? We raised almost $50 million over 8 tranches. So I think it's a really important proof of concept in the market. I think what's going on with regulators globally, I think is also part of the liquid value proposition. This is something that I think Arnab and Tobias, we've talked about ourselves for a number of years, but I think that the broader market is probably only just coming to grips with. There's a number of technologies that have been used to facilitate the issuance of security-like products, and almost all of them have an ICO attached to them or some sort of speculation coin attached to them. And I think that's kind of the business model, is that you issue on, protocol X, and then you need to buy, token X to pay for issuances or transaction fees or dividend distribution or all of that stuff. And I think there's not an insignificant amount of regulatory risk on that for issuers. And I think a lot of times, especially when you're talking to issuers from the traditional world, they maybe don't fully appreciate that because they're not deep in the weeds as we are. And I think in a lot of cases, they don't even know to answer that question. But certainly that's something that could really come back and be a big problem. And now we're seeing a number of these technologies are being given a really hard look by regulators globally. And I think that's one of the things that differentiates Liquid, especially for a security token application. And there's no ICO, there's no speculation coin attached to it. Liquid is a sidechain of Bitcoin, and I think that's just a much cleaner model to offer issuers.
I think I have a follow-up question, Jesse, on this point, because
Sure.
You're talking to a lot of issuers also. Like, do you also see from them right now interest in using a Bitcoin sidechain is changing, or like, do you see more interest in that regard?
Yeah, I think once you point that out, was there an echo there? I think once you point that out to people, they understand that situation, but I find that a lot of issuers have never actually thought about that.
Yeah, makes sense, because everybody thinks all the blockchains are the same, right? It has to have a token, and it has to have some marketing and all these kind of things, or a distributed ledger and all these kind of things, right? And everything is decentralized, right?
Yeah, and I think also this benefit of Liquid, that it doesn't have an ICO attached to it, it didn't have a speculation coin attached to it. It's also in some ways a negative, and it's probably hurt Liquid to some degree, right? It's a really good piece of technology. Like, I'm always kind of blown away when I can send USDT from my green wallet to Bitfinex, and it settles in like a minute, and I pay like 4 cents. That's pretty amazing. But I think, because it didn't have an ICO, it didn't have that war chest of funds to go around and market and to kind of, pay for integrations with various wallets and exchanges. So, Liquid has really kind of flown under the radar. And I think it's only really known by, probably people in our industry that are really focused on security tokens, or people that are very deep down the Bitcoin rabbit hole.
Yeah, I think connected to just what you mentioned and connected to my question, because I'm talking to a lot of issuers while doing the business development for STOKR and talking to people regarding STOKR, and you are talking to a lot of issuers also from your side at Bitfinex Securities. So, what kind of issuers you see at the moment in the current macroeconomic situation are interested to issue digital securities on Bitfinex Securities? And on the other side, I think connected to the same question, you're also seeing the investors, because it's a two-sided marketplace that you're managing. So what kind of investors are interested in investing in such assets? So that will be an interesting kind of piece of information.
Yeah, that's a good question. I think it really runs the gambit. I think, the issuers that I'm really interested in is, I like established companies. I like companies that have cash flow. I like companies that are modelable. And I think there's probably a bit of, when we talk to various, brokers or asset managers, and they ask us, what kind of issuers do you think are appropriate? I think there's a tendency on their part to look towards technology or growth companies or blockchain companies. And I think actually it's probably more interesting from my perspective to find kind of lower volatility companies or projects that offer yield, that have really predictable cash flow, because I think people within the digital asset industry already have a lot of we have a lot of volatility in our portfolio already. And I think we're all looking for ways to take a little bit of volatility out of our portfolio. And I think that's part of the reason why assets like, Tether and Tether Gold have been so massively popular, is because, in an industry where Bitcoin is one of the lower volatility assets, there's just a real hunger for low volatility assets. And I think in terms of the macro kind of outlook for this and what kind of issuers we're going to be dealing with in the future, my view for a long time has been that the technological advantages of tokenized securities, that we mentioned before, and all the efficiencies that tokenization creates in terms of speed and cost, that all of those will start to that'll be a big draw for mainstream institutional investors. That will start to pull people in. And if you look at comments from people like Larry Fink and BlackRock's in the news again recently, I think that's increasingly become a consensus view. So I think that's really interesting. I think a big part of the value proposition here is liquidity. And we were talking before about maybe, where we can bring liquidity to different parts of the market. I think, private debt is a good example of that. I think what MIFIL is doing with promissory notes on liquid in Latin America, that's a really good example. Tokenized private equity is another good one. And even tokenized public equity. I mean, the way I became interested in security tokens was working at Macquarie in Taiwan in ECM. And there's just a ton of companies in Taiwan, and I think probably across Asia, that are listed. They make money, they pay a decent dividend, but for a variety of reasons, they just have very little liquidity. So I think those kind of companies are a great target for tokenization as well. Also, I think there's whole regions that are kind of underserved by legacy capital markets. It's kind of a cliche to talk about banking the unbanked in our industry, but I think there's silos of companies and investment opportunities in like Central Asia, certainly, Africa, Latin America, that are underserved by traditional investment banks and that struggle to get access to global capital markets. And so I think in a way they're also unbanked. And I think our technological advantages and our efficiencies and our ability to operate at a much lower cost basis than investment banks, so we can actually engage with companies in these regions, I think that's another massive opportunity for us as well.
I think you have a question, right?
Yeah, because like you mentioned, Jesse, that like looking also like in the Latin America market, right? And you said like public debt might be also like an interesting asset class to look at for security tokens. We both know that there is like this volcano bond project, and I think like your mother company Bitfinex is also heavily involved in building on that. Do you have like some kind of insights in this respect? Will this also come like then on an exchange, maybe like a different one, also run by Bitfinex Securities? What is your take on that?
Yeah, I think on volcano energy, I don't really have any specific details or updates on that. But I do appreciate that the market and myself also is very eagerly awaiting to see what emerges out of the El Salvador regime. I think this is a very new industry, and I think what El Salvador is doing is very, very unique. And I think their approach at the moment is to launch a few smaller issuances first to test out the pipes, and then to rather than to start it off with a single giant issuance. And I think that's definitely the right way to go. And I think I'd have to, I've been pretty impressed in my interactions with El Salvador at their commitment to try and structure a sustainable capital market ecosystem. And I think that's kind of the way to do it.
So I think the follow-up what Tobias mentioned, because on one side, Bitfinex Securities has AIFC regulatory regime where you're operating in at the moment. On the other side, you have El Salvador, so there's Latin American countries. So how do you see going forward, these two regulatory environment will shape the operations? Do you have some view on that?
Yeah, I do. I kind of think, I think generally, and you might disagree with me on this because you guys are based in Luxembourg, but I think the opportunity for security tokens is probably inherently skewed towards places like the AIFC and places like El Salvador, small to mid-size economies, simply because the upside is so massive and the downside is so little. Like we talked earlier about financial services being 4% of GDP in Kazakhstan. It's probably like less than 2% in El Salvador. In a place like Singapore or maybe Luxembourg as well, maybe it's like 20% or more. So, major financial centers already have a massive, leading position in capital markets. And there's so much more pushback from large, powerful incumbents that are, have dug very, very deep moats. And that, quite frankly, we're trying to disintermediate. So I think this opportunity is really heavily skewed towards places like AFC and in El Salvador. And my pitch has always been, I tried this pitch in Taiwan for years and it kind of fell on deaf ears, but my pitch was always that it's difficult to compete with these major financial centers, and whether it's Singapore, whether it's London or New York, if you come at them directly, but this technology allows an opportunity to come at them asymmetrically. and to really close the gap with these traditional financial centers, and maybe even create new financial centers by leveraging this technology. And I think that Bitfinex had this really good article about our freedom manifesto that I really liked. It's actually quite inspiring to have that kind of a viewpoint from senior management when you're working at a company. And I think that idea of this opportunity being skewed towards small and mid-sized economy fits really well with Bitfinex's broader strategic approach to focus on emerging markets. And I think that it's in emerging markets where the really innovative parts of our industry are in high demand. And I think where we can be more creative to issuers who, as I said, maybe they struggle to get access to global capital markets, or investors that have no access to low volatility assets or high quality investment opportunities. And I think where Bitfinex Securities and Bitfinex, where we can be more creative and really move the needle in terms of economic growth.
I have something to add quickly.
Okay.
No, I think like what you mentioned, to be honest, I'm not born in Europe, right? So I'm born in India, then I moved to Europe a few years back, and so I have seen I would say both the side, not in that sense like I'm born in India, so I didn't born in a country where there was no internet, right? I still have access to my childhood, but where I see it's kind of not a zero-sum game here, right? Because what STOKR's role is making those expensive capital market infrastructure accessible. That's, I think, one of the biggest use case that the DLT is providing, is making like Luxembourg. When you say, and we are talking to a lot of issuers, I think, oh, okay, you're pitching Luxembourg, it will be crazy expensive and we can never open an office or structure there, right? But when you use technology, when you use a very sophisticated way of, kind of using kind of a standardized models, you can reduce the issuance cost substantially. And then you get, as an issuer, you get all this, because capital markets infrastructure has been developed over the years, a lot of best practices, a lot of investor protection, all these things got, adopted years after year. So issuers provides that to the investors from a vehicle like Luxembourg. But as Tobias, and when we were discussing about this point, and you also mentioned about one of the limitation of Europe right now is bringing those securities in tradable format, is the CSDs in the current regulatory environment cannot hold digital securities. Now, there is a pilot regime that is a regulatory environment that is currently being processed, which may change it in the future, but that's in a sandbox. So where I see, and this is kind of where STOKR also kind of positioning itself, is we see the Europe can be still a very good market for issuance jurisdiction, but then the secondary trading will be in the places like, Bitfinex Securities with AIFC, Bitfinex Securities, Kazakhstan, and a few other jurisdictions. That way, the investors get the both of the best of the world. So they're getting the stability of certain regulatory environment, but also they get a flexibility of trading environment. And I think if we can do that and using tech, and that can provide the maximum value with the same amount of risk measures and all this kind of protectionist measures we can provide to the investors, I think it is great for the ecosystem as a whole.
Yeah, I think to add on that one, I think I hear you, Jesse. I think this is also something we have obviously observed in the past, and we still observe. It's of course the incumbents have a much bigger influence in really established financial markets, right? But I think also the financial markets have created efficiencies in this sense, right? So you have very lean structures which you can use, and then maybe integrate into now extremely innovative secondary market places like yours. But I think the incumbents argument, I think it's definitely a valid, yeah.
And I think some of the assets, sorry, go ahead, Jesse.
No, I was just going to say, I do think it's quite interesting that, capital markets, I think, have been really resistant to technological change over the last couple of decades. I mean, the US, the Securities Act of 1933 is almost 100 years old, right? So there's a lot of parts of the traditional system that traditional system grew out organically over 100 plus years, right? So there's a lot of parts that are maybe not necessarily in today's day and age, and that can be probably pruned back. It's just really difficult, I think, in incumbent markets to do that. And there's a lot of moats that have been dug very deep. There's probably no reason from an issuer or an investor perspective why those kind of things are there, but that's somebody who's making money on it, and it's difficult to roll that back. So I do think that's an advantage for a place like El Salvador, where they have an opportunity to start things completely fresh and structure everything, with the understanding of the technology that's available in 2023.
And I think one thing which you just mentioned also resonates to me very, I would say, strongly, is the fact that there are a lot of small mid-sized issuers stuck in big capital markets like Nasdaq or something like that. They will never get as relevant as Apple or Google and those kind of players, right? But these guys can then come to this digital security space and can actually find an alternative way of, capital market infrastructure that can provide them a better visibility and better, I would say, acceptability in the market. And that's, I think, one of the very strong point. And maybe, this is kind of where my roots comes in. The developing economies provides a very strong players, very strong companies in that regard. And I think that's a great thing that you guys are doing, to be honest. And congratulations for that also.
Yeah, no, it's really exciting. I mean, I couldn't think of a job or an industry that I'd rather be doing than this one. It is really exciting to be on the forefront of this stuff.
So, well, I think we are kind of at the end of this episode. I think the last question, Jesse, for you on this is, where do you see the market in 2028, and where do you see Bitfinex Securities in the market in the next 5 years down the line?
Yeah, I was going to ask you, 2028, that's kind of an interesting date. Why did you pick that? Because that puts us through the next halving and almost into the fifth halving.
Yeah.
So I was wondering, maybe Arnab has a Bitcoin price prediction. Do you have a Bitcoin price target that you wanted to share, Arnab?
I think the world, how I see right now, is a halving basis rather than 5 years, 10 years time frame, right? So every halving will be a new economic kind of, and that's kind of an interesting thing. I think not very many people will see that, right? To be honest, and this is kind of where we see the how entire US SEC thing played out in the last few days. I would say even days, right? 60, 70 days, right?
Yeah.
And then in the last few days, we heard that about, BlackRock is filing an ETF. And to be honest, when BlackRock is filing an ETF, it's something that I would expect this is accepted already, right? It's just the official signature is waiting, because BlackRock will not be rejected by Gary Gensler, right? I don't think that's going to happen. At least I will not see that in the next 5 years.
Yeah, so no, I mean, that's something we were talking about 5 years ago, though. If you would have asked me about that in 2015, I would have expected that we'd already have an ETF in the US. But
now maybe it's happening. So definitely, I think the Bitcoin and this is, I think, the market cleanup really showed that Bitcoin is not only, I would say, it's definitely a store of value. Definitely, there is a huge value as kind of a unit of economics in Germany, how they say, but I think I personally see it as much more a store of value in the current deflationary environment. So so I think that's kind of but I will not give any Bitcoin price prediction. I have a laser eye still, so I will expect 100K.
Well, I was actually looking at it, right, and I was talking to Samson about this a couple of weeks ago, and it's like the annual. If you look at the 5-year median, the annual return is 60%. And if you look at the 10-year median, it's 60%. So you can go and apply that on an annual basis and see where that gets you in 5 years. But anyway, I think it'll be, Bitcoin price will probably be higher than it is today. In terms of where I see Bitfinex Securities and where I see the market, I can tell you what I'd like to see. I think what I'd like to see is STOs to be viewed as a technologically upgraded version of depository receipts by public companies. So that's something we didn't touch on. But last week when I was in Kazakhstan, we announced an MOU with the traditional securities exchange in the AIF, the Astana International Exchange, and we're working on a project for dual listings. So we'll have conventional securities that could convert to tokenized securities. And I think this is massively interesting and potentially massively disruptive. So to me, it would be really exciting if in 2028, we can have, multiple issuances like this out in the market with public companies using the idea of STOs as the same way they use GDRs today, right? So people use depository receipts now, especially in Asia, to get access to, major financial markets like Europe or the US. So TSMC, for example, has an ADR in the US that trades on US hours. And it's just easier for US investors to get access to the ADR versus, TSMC, the stock, because you have to have a foreign investor number and all of that in Taiwan or South Korea or India as well. So that's one really exciting thing that I think is achievable and I hope to see in the next 5 years. I also hope to see a really robust capital market ecosystem developing in places like the AIFC and in El Salvador, and with other countries in the emerging world looking towards El Salvador as an example for like a viable path where you can go from an emerging market into a more developed market. And I hope we can be a contributor to that, not only in building financial services, but building, helping all these companies that are looking to raise money or moving to El Salvador, helping them raise capital and get access to global markets. And then also, for Liquid to have a really well beaten path for Liquid, for issuers from all over the world to gain access to global capital markets, and for users to be able to take back some of the control that I think has been eroded over, their assets over the past couple of decades. So for users to have the ability to self-custody their securities, right? To be able to withdraw your securities from a platform and move them to another platform for arbitrage, to trade them peer-to-peer within a whitelisted ecosystem. And then things like more granular voting and dividend distribution. This is stuff that I think is all massively exciting, and I think certainly doable on a 5-year time frame. And then to have all of that, to have that, most of that built on top of the Bitcoin network, I think that would be really exciting.
Perfect. So I think the end statement should be the built on Bitcoin. And thanks, Jesse, for joining us. And thanks for the audience also listening to this. If you have any comments, please feel free to share on the comment section, and see you in the next days. Thanks, Jesse. Thanks for joining us.
Thanks a lot, guys. Really appreciate it.
Thank you.
Bye.